watching Your Stocks. The next query comes in from Mrs. Gauri Khatri, who's written to us from Lucknow. She has 600 shares of Indiabulls Ventures, which she has bought at 297 rupees. She's a short-term investor and wants to know what to do. Kiran, up your alley, what will it be on Indiabulls Ventures?
Well, this stock has done a very good trend reversal price pattern called as an inverted head and shoulder, and the breakout has happened only a few days back at around, and the breakout value is around 185. So I suggest that one should hold this. A fresh buy is also recommended. My stop loss will be below the neckline, which is 180, and my target for this counter would be around 300, 325. So long way to go for this counter. So I think since she has purchased her shares at 300 and we are expecting this price to go back to 300, this is a good level to buy more of this counter at the present rate. For both the purchases, my stop loss will be 170, and we will have a target of 300, 325, which should be achieved in the next quarter or so.
All right, let's move on to another query. Then we have Parth Shukla writing to us from Madhya Pradesh. Holds about 200 shares of Power Grid at 175 rupees a piece. Wants to know whether to hold or sell. Well, Gaurang, our viewer has no time limit on holding. A lot of analysts are fairly positive on Power Grid from the utility space. Perhaps the only stock they're positive on. Would you concur?
Definitely, yes. In fact, we have a coverage on one more company called REC. And the changes that the government is planning to do for the power generation companies, I think the next in line to be benefited would be transmission and distribution companies. And I think over there, Power Grid and REC would stand to benefit. We have a target of somewhere close to about 225 Mangalam on a long-term basis.
Okay, Kiran, you track Power Grid. What's the target that you have and what's your recommendation on the stock?
Well, 180 should be the stop loss. Hold is what I recommend. We should see the stock moving towards the 200 mark in the next, say, week or so. So we should take, the investors should take a review at around the 200 mark where there's a big supply zone. And once this supply zone is taken out, then we'll see fresh breakouts happening on this counter. So for now, 180 is my stop loss.
Okay, so Chitra Doshi has written to us from Gujarat. She has 250 shares of MRF. She wants to know what to do at the moment. She wants to exit the stock in the next 6 months. Gaurang, the tire pack, how does it look to you and MRF specifically?
So, Sumera, first of all, the next beneficiary of the recovery in auto sector is going to be tire and ancillary companies, OEM. And another benefit for them is that what I'm given to understand is that the rubber prices in the international market has been at a very reasonable level. There is not much of a fluctuation. Crude oil prices on the boil should come back. And not only that, MRF has got the great product lineup, product mix as we call it, but also a new order market and a replacement market. And whether you drive a fossil fuel vehicle, whether you drive a CNG vehicle, or whether you drive an electric vehicle, you need a tire to drive that vehicle around. So we remain positive on MRF. Her question as to 6 months, what would be the levels? I think Kiran is able to help over there.
Absolutely. And you know, not just tire. The other day I was skimming through a magazine. I came across an ad for MRF specialty paints. So MRF also does paints. And over the last 1 or 2 years, I've been looking at the annual report, and it looks like they've been increasing activity around it, training more salespeople or tapping into newer markets. So apart from tire, we'll have MRF paints as well.
And they have exclusive outlets also, MRF, wheel balancing and etc. what they do. I think that's also going to add to the earnings of the company over a longer period of time.
All right. The paints business actually last year did a revenue growth of 24%, much better than all the other paint companies. But again, comes on a low base of 217 odd crores. But Kiran, 6-month target on MRF?
Well, this stock has also given a breakout last Friday, and the breakout level is around 64,800. So my stop loss would be around the 64 or even below that. I believe that one should hold on to this counter, not 6 months, but I believe the investors should have a view of around 1.5 years from now on. The second important resistance now of a falling trend line is at around the 67,200 mark. Once this level is taken out, I believe this stock is heading towards the say around 76, 78,000 levels. So yes, the trend is right. It's long, and one should hold on with the trailing stop loss for now.
All right, hold on with the trailing stop loss from now for MRF. Meanwhile, we have another query coming in, our last query for the day. Abhishek Upadhyay writes to us from Agra, wants to know if graphite is a buy or sell in 2020. Interesting question there, because if you take a look at 2019, there has been a sharp amount of stock price decline, close to around 60% eroded in Graphite India. Turn the clock back to 2018, there has been some recovery or some flattishness out there, but 2017 was when this stock moved 1,000% odd. Kiran, after that sharp rise, we've seen a sharp fall, and led by fundamentals as well. Their EBITDA was down by almost 80-85%. People believe that it can go down further. Do the charts indicate any sort of recovery in 2020?
For now, it's an avoid from me, because the charts are pretty range bound and it's trading in a tight range, and the range is around 240, 45 on the, 260 on the lower side and 370 on the higher side. The stock is going nowhere for now. So till the time we don't have a fresh breakout, I think it's best to avoid this counter.
All right, gentlemen, thanks very much, Kiran and Gaurang, for joining in, and I wish you a very, very happy New Year, and we hope you'll continue indulging us in 2020 as well. Thanks very much. All right, RBI's Operation Twist 2.0 begins today. RBI will buy 10,000 crore rupees of 10-year bonds and sell under 1-year bonds. We caught up with Dinesh Kumar Khara of SBI and Kamal Mahajan of Bank of Baroda to talk about this move and also the stress in the banking space.
We are making efforts, but saying that what will happen really finally, I think we'll have to only wait till the final event. So that's how it is. But yes, of course, possibility of writing back also will also depend upon that how much are we in a position to recover. So that is something, it's again a bit of an estimation as of now, but I think we'll wait for the final event.
Profits certainly are a game of MTM also, and otherwise the real profit of the trading. As far as MTM was there, nothing was worrying even before this switch. Rather, even after 5th when yields rose, that was not an issue for the market, because all valuations are based on 31st March. And yields were quite higher at 31st March, like 10-year was at 7.35. So that's a accounting game, But yes, if we say that has the real value increased, yes. Gains we can still believe. If we look at the longer end of the curve, in fact it is 15-year and above is now lower than even pre-5th December.
Metal stocks at the high point of the day, so we'll keep an eye out on that. We have JSW Steel, Vedanta, JSPL, the Nifty Metal Index actually surging as we speak. But with that, we've wrapped up on the show. As we do that, here's something to note. A lot of investors, they burn their fingers investing in sectoral or thematic funds. In fact, advisors suggest just a minimum allocation to these funds in your portfolio, if at all. Here's an interesting take by my colleague Sumaira Abdi on why these funds just don't make sense for the retail investor. Do that, watch and come back. We'll have closing bell.